Hey, it's Don the Auction Professor here. Today I'm going to revisit another video from just a couple days ago. I have a link to it right up here as well as it's in the description and the comments section below. The video is titled eBay Seller Options Breakdown, and I address different options and ways to sell. There is a typo in that video. The actual anchor store fees that we pay should have stated $250 and not $150. I did leave it because the $100 means nothing. The video is on concepts, on business models, and not the exact specific dollar amount. As I say in the video, the prices could vary up or down in either direction, and the $100 difference that I actually typoed in the video isn't going to make any difference. It's a concept. Anybody making $15,000 a month, which is what the concept is based on, the model explanation, isn't going to worry about the $100 either way, whether it's more or $100 less. You're still making over $10,000 in that example. I also wanted to address why we didn't include shipping in there. Many people brought up the issue of shipping. Anybody who's watched my channel knows that I charge for all shipping. Every person that buys from our store pays for the shipping, so I do not pay for shipping. As well, with shipping, when we send out the invoices to them, we do not give out a discount. We get a shipping discount from the post office through eBay. So it's actually lower than what we charge. So the difference actually covers our boxes, our packing material, and shipping supplies. So basically, we don't have a dime whatsoever into shipping. That is perfectly fine with eBay. You are completely allowed to do that as long as the shipping charge that you state for your items does not change. You are going to be charged a final value fee, but again, it doesn't make much difference either way you go on that. Another issue with that as well is why I would deduct the price from the boxes out of it, because eBay overcharges us for those boxes. 100% correct, eBay does overcharge us for our boxes. I can get the exact same boxes for almost a third less than what eBay charges. That's not the point though in the concept. We do deduct that out of there because eBay states that we have $150 worth of free boxes a quarter. We do deduct that from what we pay for our listing fees because boxes are supplies. It's a counting issue more than anything else. That $50 a month actually goes into a supply line. It does not go against what I pay for my items. Whether they're overcharged or not, it's not the point. The point is, for accounting purposes, eBay states that there's $150 worth of boxes out of my $300 anchor fee for my store. So basically, we just split that off. That goes into a supply line in our Excel spreadsheet for my expenses. It is not an expense for listing. It is only a supply expense for shipping items. And again, I don't pay for that. So that $50 goes somewhere else into a different column. So at the end of the year, when I turn these over to my accountant, he sees that eBay states $150. That money goes over there into a different supply line. So that's why the breakdown is shown that way. So if you aren't charging for shipping, your expenses will be different. Again, as I said in the video, expenses can go up, they can go down, they can vary by every individual person figuring out these expenses. That's not the issue of the video in any way, shape, or form. The issue is the concepts. The idea that long tail works as opposed to other options that you can use. The business models that work. That is the concept of the video. That is what the video is addressing. The concept, the idea that you can run long tail and the fees are not going to kill your business. The fact that you can run and do RA and spend a fortune on gas, that is not going to affect your business. Other comments were addressed on the fact that there's upkeep on your car. Now, upkeep again is just like the boxes. That's an expense. That is not a direct expense related to purchasing the items. Expenses on upkeep on a car are figured out differently. They could be capitalized, meaning that you could split them up over a certain period of time. It is not the same type of expense as gas would be. So I just wanted to get those corrections out there so people understand. We still account for the $150 in boxes, as I've said, but it just doesn't go into the same category, and it doesn't go against the cost of my item. These are different columns in an Excel accounting breakdown. And at the end of the year, I have a spreadsheet that has administrative It has upkeep, repairs. They all go in a specific column. Each one is covered differently. So as well, the expenses just depend on what type of expenses there are. Whether it's a car expense, you might be able to capitalize it if it's wear and tear and there's an engine. So don't center in on those type of aspects. The point, again, is the business model, the plan that you're using for eBay and what does and doesn't work. They're concepts, they're business models. So as well, the video is not a dollar for dollar breakdown on what exactly you're going to spend, because there's no way I could do that. Sales are different. The amount of listings that you have are different. Every aspect is different for each and every person. $100 is not going to make or break anybody whatsoever, especially if you're doing $15,000 in sales. I don't worry about $100 extra dollars in fees or $100 less in fees. I do account for all of those fees somewhere. It just may not be accounted for in the cost of the item. Many people as well don't just use their car for business, so you can't deduct things the same way. It is not the same type of expense as gas directly related to your sourcing trips. You can account for those type of expenses differently. You can't account the same way for upkeep on the car if you use it for different things. So again, it's based on percentages. You can capitalize and you can amortize, spreading out some of those expenses over a certain length of time. That is an overall business expense, the car. The gas may or may not be, depending on how you are accounting for it. That expense breakdown from the government gives you a certain amount that you're allowed to deduct for each mile you drive. So it just depends on how you do it. So I do not include that on the cost of the items. So as the video states, these are not exact numbers. These can go up, they can go down. They vary by every individual person trying to figure that out. There is no set pattern that I can give that every single person is going to be able to match to. It doesn't work that way. There are concepts in the video, business models that you can use that will increase your profits at the end of the day. Again, I've got the video linked down below. It's in the description. It's also in the comment sections. Getting something that works for you. You won't even know it works if you haven't drawn this out and made a plan for your business. You can't just go day by day and hope everything works out. You have to set up a business plan, a model that you will use that will get you the money. That's what we did, and we stick to that. We follow set patterns. We follow set ways that we do things. You have to have a routine. You can't just go day by day and hope everything works out fine. So that's what you need to be paying attention to. You need to pay attention to the model itself. It's to express the fact that you can make money doing things like that. Things that people say just aren't going to make you money. A $500 or $1,000 in gas is a drop in the bucket when you're making $15,000. $100 extra in fees, again, is a drop in the bucket if you're making $15,000. Concepts are the key thing here. Don't dwell on $100. Don't dwell on gas. Don't dwell on any of the other aspects of it. Look at it as an overall picture on things that can work for you. There's many, many other plans or policies that can get you the same net results. Many people just do auctions even. Many people do all kinds of hyperbreeds of business models that most people never would have heard of or thought would even work. Anything can work if you work it right, if you know what you're doing, you pay attention to keywords, the items, and do your research. It's being able to break it all down to know why you're making money, to know where all your expenses are going. We track everything. I know where every single dime in my business goes on any day of the week. It's just how you need to run your business if you want to be successful. It's watching your expenses and knowing where your money goes, knowing where that dime is being spent. That way you can optimize your accounts, you can optimize your business, and you can make the most you can no matter what across the board for whatever you're doing. Having the right business model for your specific business is key to this. Take whatever information I give you and tailor it to your own needs. Your fees are going to be different. Your expenses are going to be different. Your tax accounting methods may be different as well. Business in general is about change and adapting to what's going on in the environment. I look at the environment that this is all in as well. So if you're not checking out the environment, what's going on in the industry, how pricing has changed, you're really missing out on some of that. So anyway, I hope that helps you. If you enjoyed the video, please hit that like button down below. You can also hit the bell icon to be notified if I post new content or go live. Subscribe and tell a friend.